Everyone, welcome back to your weekly market outlook. This is for the 24th of March 2025. Let's get this started with what's been going on last week. Obviously, we've got central bank decisions across the board there. We've got Bank of Japan, we've got FOMC, we've got the Swiss National Bank, we've got the Bank of England. Let me just walk through you on what's going on here. Bank of Japan, that's the first one, unchanged. This is as per consensus, and in terms of their comments as well as during the press conference, I think we're talking about wages going up there, which is likely going to push inflation up. But at the same time, they're not really in a rush because they want to see what's going on in the US first and how is that going to affect the global market. So rates unchanged at this point in time. I think the market is still projecting for one more potential hike coming up from the Bank of Japan in 2025. We got the FOMC next there, unchanged as per expected. The FOMC economic projections here points to a potential stagflation where the economic growth is potentially likely going to slow down a little bit while inflation could go up there. So that's the current situation in the US. And again, FOMC is also talking about how the Trump tariff is going to be. I think they mentioned it's likely going to be transitory. This is the word last used in 2022. And again, if we go by that word, it basically means that it's temporary, it's not going to last long, it's not going to have a huge impact into the economy. And that's basically the words that the FOMC has been using. It does sound a little bit more on the hawkish side because they are sticking to the previous dot plot, which is 2 rate cuts in 2025, and not really pricing in for a third one at this point in time. They might actually go with 1 rate cut in 2025. So overall, from the economic projections and the statement, what we get from the FOMC, it seems to be a little bit more on the hawkish side there. Swiss National Bank cuts interest rates by 25 basis points. Now, if you take a look here, the Japanese interest rate is actually higher than the Swiss interest rate. It is at 0.25% there. So it's very interesting. They're both safe haven currencies, and I think for the first time in a very long time, the Japanese economy has a higher interest rate, so we might actually see a potential shift in how traders are actually going to trade the Swiss Japanese yen here. They might actually do the reverse. The carry is now shorting Swiss Japanese yen. That would give them the carry instead of going long against the Japanese yen. So this is actually a very interesting change in the dynamics between the two here. All right, Bank of England, we got 1 vote for cut. The consensus was for 2 votes for interest rates cut. So this comes across as a little bit more on the hawkish side. However, the statement that comes along with it and comments from Bailey, it's really more on mimicking what the FOMC is going to be doing. So Bank of England is just basically just not going to be the leader in terms of interest rate decision. They're just basically going to be following what the FOMC is likely going to be doing. They did mention being data dependent, but not in a way that the ECB is so much data dependent that they would actually act on their own behalf. What Bank of England position, how they position themselves, it's really more on following what the FOMC is going to be doing. So that was last week. Very interesting week there. All right, this week we've got manufacturing numbers there on Mondays. Obviously, we have the UK, the Germany, the European number, the UK number, as well as the US number. I don't think this is actually going to have a huge impact much in the market. There are going to be expectations for a lower manufacturing numbers, but this is to be expected. So this is probably not going to send the market wild or anything like that there. The Australian inflation number there, again, we don't have the consensus as of yet, but in terms of the headline inflation number, it is currently at 2.5%. This might go off plus minus 0.2% there. The UK inflation number, not expecting a huge change as well. 3% to 2.9%. I doubt this is actually going to change a lot. The annual budget release there from the UK, this is actually very interesting. What we want to see is, unlike the European side of things where the Germans had their surplus in terms of their budgets for spending, which is 500 billion, it does prop the euro a lot. In terms of the sterling side, we're not expecting any stimulus coming out from the UK. So I don't think this is actually going to be any fuel for a stronger sterling. So just keep that in mind. That's going to be on Wednesday. It's tentative, obviously, but we're going to be looking at somewhere between Wednesday there for those release there. And then on Thursday, we have the US quarterly final GDP numbers, and we do expect the GDP numbers here to be kind of in a ballpark there at 2.3% to 2.4%. It's more or less about the same, unless we have a surprising number there, unless we get a 1.7 or anything lower than 2%. I don't think that's actually going to create a lot of ripple into the market there. But yeah, anything higher than 2.4%, that's going to boost a lot of the risk assets up. So just keep that in mind. It is actually very important there. Then finally, obviously, end of the month there, we got the PCE numbers, and the core PCE numbers expected to remain stable at 0.3%. I don't think this is actually going to have a huge impact unless it's a huge miss, because this is already mentioned last week during the FOMC, during the press conference, as well as in the economic projections, that the FOMC does give room for a little bit of an increase onto the PCE numbers, which is still going to be all right for them, and they don't have to be doing anything. So those are the data that's actually going to be released this week. All right, moving on to the technicals. The Aussie there, it failed again at a bearish order block last week. So it fell again, very close to 64 cents. Price opened up below 63 cents today. It closes below 63 cents. It didn't transition below the Ichimoku cloud though, which is very concerning because it didn't give us that motivation to start shorting the Aussie at this point in time. But if on Monday price continues to fail at 63 cents, then yeah, I think we are going to get a lot of sellers coming in at around 63 cents. That could push the Aussie down. We're not expecting crazy movement here. This is still very much a range-bound market condition here for the Aussie. We're still going to be looking at support around 62 cents for the Aussie USD. All right, next up is the Euro USD. The Euro USD, we just need that close below 1.08. This one is very persistent. It is losing a lot of upside momentum at this point in time. It looks very top heavy, right? We're just waiting for that overbought condition. We're just waiting for the stochastics to knock down below 80. And once price is below 1.08, then I think it will start a correction on the Euro USD. In terms of how far the correction is, we're currently projecting a correction towards 1.0650 and potentially 1.06. That's where the 50% and 61.8% retracement is likely going to be on the Euro USD. Sterling, very similar situation here. 1.3, very strong resistance, and we keep mentioning this in the outlook. I think for the past month, for the month of March, we were just looking for the month of March for the sterling to kind of slow down in terms of how far it can go up to, and in terms of how far it can go, it's likely going to be capped at 1.3. We got a very sharp rejection at 1.3 last week. 3 days it was at 1.3 and then it failed. So right now I think it has initiated that correction on the sterling here. And obviously, how far down this one here is going to be, I think the range is probably going to be smaller than the euro. We have support at 1.28, and below 1.28, we have support at 1.27 on the sterling here. But again, we still expect a correction. Again, this is not a change in the trend, because you can see that the uptrend is still intact. It's just a needed correction at this point in time. Like the US dollar, it needs to have a little bit of a correction. The euro needs a correction. The sterling needs a correction. Dollar yen also needs a correction. Dollar yen, it's on the brink of breaking that resistance trend line there. So if today it closes above 149.90, 150 level, ideally we want to see a close above 150. That would prompt a lot of buyers into the market to take this up a little bit higher for that technical correction. We are currently eyeing 152. That's where the Ichimoku cloud is currently located. Also, a weekly pivot is currently at the R3 weekly pivot is at 152.20. So around 152, that's how far back the pullback that we are anticipating on the dollar Japanese yen here. And obviously, at around that level there, we need to see what the reaction is. Are carry traders going to pump this up higher than 152, or are they just going to let go of 152? And if that's the case, then it will complete a correction. The dollar yen remains in a downtrend. So that's what we can tell right now, that this week potentially is the week where we see that correction happen with the US dollar, which is also going to affect all the corrections on the major currencies as well. So with that, good luck with your trades for this week, and I'll see you soon.